Okay, go ahead.
Hey guys, this is Katie. I did a live, or I'm sorry, not a live, but a video last week where I asked you guys some questions that you had about the home buying process. And most of your questions were related to finances and credit and things like that, which in the state of Washington as a realtor, I'm only allowed to answer on a very limited basis. So I brought in Jeff. He is my preferred lender, Jeff Miltenberger with NFM Lending. He's the best. He's the only person I trusted for my own personal home loan. And I thought he would be a great resource for us to answer some of your basic questions. So Jeff, go ahead and introduce yourself and we'll get into it.
Hey, thanks, Kate, for a great intro. I appreciate that. Love working with you as well. Super excited to talk to your viewers out there. There's still a lot of craziness going on with COVID, so it's good to get out there and see what's available and what's not, and kind of lay some of these rumors to rest once and for all. So I'm excited to hear what your viewers have been talking about and what their questions are.
Yeah. So the biggest question I had was a lot of people are wondering where they start. And I always recommend that someone start with talking to someone like yourself, a mortgage lender, to get information about what they qualify for and get that home shopping list that you always talk about. So do you want to get into a little bit of why that's so important?
Yeah, I mean, that is a fabulous first place to start. There's no doubt about that. I mean, you got to know what you qualify for, or even if you qualify for something. I mean, that's the worst thing that I've seen happen in the past is, someone wants to go out and buy a house. They start looking, they go actually see the house in person with their realtor, and then they go talk to a lender finally to find out, oh, sorry, you don't qualify. Or they find out that their payment's going to be way higher than they expected. Or they find out they need to put, $20,000 down on a house or something like that. I mean, there's so many things that you have to think about when you're buying a house that if you don't know the very basic of how much do you qualify for, the rest of it's going to be not easy, and it's probably going to be a bad experience. So talking to a lender is just going to find out which programs you qualify for. There's down payment assistance out there, so you may not even need a down payment. It's going to find out what your payments are like, because that's really important. You need to know how much your payment's going to be. If your payment's going to be way higher than you thought, that might change your thinking. It might change how much you want to go for as far as purchase price and things like that. So by far the best thing to do is to start with a lender. Now, do you see a lot of clients hesitate? Why would the hesitation be of not wanting to talk to a lender? What do you see out there from that standpoint?
So for my clients, the biggest questions are credit, and if their credit is going to be a score big enough to qualify. And then their other hesitation is, well, if my credit's borderline, or even if I have really, really good credit, they're afraid of the hit on their credit score to getting pre-qualified before maybe they're ready, or that's the biggest concern. Everybody's like, I want to look at houses before I take that hit on my credit. And I find that is a backwards way of going.
Well, and I'm glad you brought that up. That is probably one of the most important questions that needs to be answered out there. It's kind of like, the cart before the horse. You want to go look at houses thinking your credit is what you think it is. Here's the dilemma is when you're dealing with a mortgage, us as mortgage companies, mortgage banks, I don't care where you go, we pull a different algorithm for your scores. So I've had clients come to me and say, hey, I've got 760 scores. I don't care. You don't need to pull my credit. I'm going to qualify for just fine. And then they find a house and we pull their credit and they have a 680. And they're like, oh my God, what did you do to my credit? And I'm like, I didn't do anything. I'm pulling a different algorithm. And the credit score algorithm for mortgages is a lot harder on credit than anything else. I've literally seen that probably multiple times, if not, 10, 15, 20 times, where someone tells me they have 740, 760, 770 scores, and I pull a score under 700. And a big part of that is the usage on credit cards, collections, things like that may or may not affect your score on like a Credit Karma or somewhere like that. Mm-hmm. Another big thing is, and you brought this up earlier in the beginning of this question, is how high is my credit score? I'm working on my credit, that kind of thing, to get them up high enough. Again, because we use a different algorithm, the way we fix credit or want to look at building credit is different than what you see on Credit Karma. So the advice they give you online is not necessarily the advice that I would give you if you're looking at building your credit for a mortgage credit score. So I think it's super important, no matter who you are, whether you have a 550 credit score on the low end and you're working on building your credit, or all the way to the other spectrum, you say you have a 770 credit score and you think you qualify no matter what. Here's a couple of things. One is, one inquiry out of the blue by a mortgage company is going to have very minimal impact. Yes, it'll have a slight impact, but when we pull your credit, it should have very minimal impact on what we're looking for score-wise. That's the first thing. Second thing is, when we see that score, there are very easy tweaks that we can tell you to do to get those scores up even higher. So even if you have a 740 score, a 730 score, but say you're going to do minimal down, like 5% down or 3% down, well, the higher that score is, the cheaper your mortgage insurance is.
Right.
So rates stop going any lower once you hit 740. So 740 is the best score for interest rates. But for mortgage insurance, which is another component of your mortgage payment, the mortgage scores go all the way up to 780, 800. So if you have really good credit, but maybe you have a high balance on a credit card one month, we might want to do some credit repair, or not, I don't want to say credit repair, but some credit building by paying down a balance on a credit card to make the scores go up even higher and put them in a better position to get lower mortgage insurance. I've seen clients literally cut their mortgage insurance premiums in half by doing just that. A small pay down on a credit card, you wait a week, boom, the scores pop, and all of a sudden they just saved $150 a month on their mortgage payment because their mortgage credit scores are higher now. So it really puts them in a good position to know exactly where they stand. Now, the people building their credit, again, we'll take a look at their credit. I've seen so many credit reports over the last 26 years of doing this. I can look at a credit report and just say, hey, you need to do this, this, and this is going to help build your credit scores up to a dramatic, to a 660 in a week. I mean, it can happen that fast. But if you're working with those credit repair places online, you know, National Credit Care and different companies like that, I mean, they'll do the job, but they're just going to take a lot longer. It could take months. And part of it is, well, you're paying them a monthly stipend, right? I mean, you're giving them a little monthly fee, but also part of it is they can't dispute everything the way that actual person can dispute things on their credit. They can only dispute a smaller percentage of everything on the credit because they're a third party acting for them. But if I can show the client who wants to build their credit, if I can show them a path and give them the tools to get there really easily, we can do it in as little, like I said, I've seen it increase in 5 to 7 business days and have people go from not qualifying to qualifying that quickly.
Yeah, I know you guys helped us a lot with Kyle and I when we were trying to get approved for our house. We just did some super minimal things and our credit jumped within 30 days, like 40 or 50 points. It was amazing. So
yeah, $100 here, $300 there, and all of a sudden your credit scores are going to go up by 30 or 40 points. It's just crazy how easy it can be. But you're never going to get there unless you actually talk to a mortgage lender that knows credit really well and can help you build to that next level. Sometimes credit repair doesn't matter, but in a lot of cases it does.
Yeah. And I find that with a lot of my clients, a lot of the things that they say is like, I really want to buy a house, but our credit's just not where it needs to be. And I try really hard to explain to people, you know, even if your credit's not where it needs to be to qualify now, just reach out to Jeff or the lender of your choice and get the information that you need so you make sure you're making the right decisions financially to get you to that place that you need for that reason, because Credit Karma and all these other online credit score places that you can go are not the most accurate, or like you said, not the algorithm is different for what you need for a mortgage. So if a mortgage is your goal, even if your credit's not where it needs to be, please reach out to Jeff. But if you reach out to a mortgage lender so they can help walk you through the steps of how to do that. The next question I got is like, if your credit is not great, but your income is really good, you have a high income, what can you do there? And I think you kind of answered that question of, if you've got a high income, talk to somebody in the mortgage industry about what steps you can take to raise that score. If you've got a high income, then hopefully you're in a position where you can make some quick, larger financial decisions that'll help impact that score more quickly. Or what would you say?
Yeah, I mean, I wanted to kind of piggyback on that, building the credit thing, like you were saying, like, don't listen to Credit Karma, because a lot of times they'll say, pay this account off in full. Well, I might say, pay that account down to $10. It might be a very specific amount. So we pull an algorithm buster. I call it an algorithm buster that basically looks at your credit and says, okay, do this, this, and this, pay down the accounts to this specific dollar amount, and your scores will go up this amount. And it's a very easy process, and you might be surprised. Again, it might be only a few $100s, but I find a lot of clients like working on their credit, and what they're doing is they're working to pay off their credit cards to zero. Mm-hmm. And then a lot of times I've had clients even close out those credit cards, and that's like a double negative. One, if you pay it down to zero, now all of a sudden you don't have any active credit on that line. So now it doesn't look like you're actively using it, right, which is a bad thing. That's why they always say a lot of times we'll get a credit building scenario where it'll say, pay down the balance on this credit card to $10. And like the client's like, well, don't you just want me to pay it off? And I'm like, no. I want you to pay it down to $10 so that it's active and it has an active balance on it. On the flip side of that, I've had clients that have low credit scores, and the fix is go charge $10 on a credit card. Again, that balance to limit ratio is super key in this. So someone with higher income has a better opportunity because they have more income coming in. We can strategize a lot more easily with them to get those accounts paid down to the likelihood of getting their scores up where we need to qualify a lot more quickly.
Yeah, and I think, like you just said, sometimes it's not even that they have like a lot of accounts or collections. They just don't know how to effectively use their credit. So, and that could be the reason that their credit score is low. I work with a lot of kind of blue collar people. We're all farm and ranch people, right? And we've got money, but we're used to paying cash for everything. So that affects your credit score. You've got to effectively use it. And so if you've got the income to do something like that, like you said, go charge something or open some sort of credit account. And sometimes that'll help. So that is a great start. The next question that I got was, a lot of people are just wondering, they think they can buy a house, but that they don't know what the first steps are. And again, first step being to talk to a realtor, talk to a mortgage lender. So for a first-time home buyer, somebody who's never bought a house first, when they talk to you, what are the first steps with you? What do you guys do with them?
I think the most important phase of those first steps is we got to get an application. I need to see what your situation is. I need to see everything, quite frankly. I want to know how much money you make, how much money you have in assets. I want to know what your credit looks like over the last, 5, 10, 15 years. I need to know everything about you so that I can figure out the best way for you to get qualified for a home loan and fit you into the right product too. There's so many different products out there. There's conventional, there's USDA, there's VA, there's FHA. There's down payment assistance through the state of Washington. I won't know exactly what you qualify for until I have all your information. A lot of times a client only wants to give me some information over the phone and say, hey, if based on this, what do I qualify for? I mean, that's not even close to what I need. Yeah, I could throw out a ballpark, but there are so many innuendos on credit and different things like that there's just no way that a ballpark number is going to get you anywhere close to where you qualify for. So I think it's super important, especially for a first-time home buyer. And this is not even, say you're looking to buy in 6 months. When's the best time to figure out where you're at? Right now. Yeah. I don't care. I would rather you call me today if you're going to buy next spring, for goodness sakes, and say, hey, I'm thinking about buying in the next 6 months to a year. I just want to see where I'm at. That's probably the smartest move any buyer. And I don't care if you have perfect credit, if you've bought before or anything like that. Yeah. Find out where you stand with a mortgage lender. Get all the documents together. And a lot of times they want to do the application and then find out where they stand. And again, the credit docs, like income documentation and stuff like that, is really important too. Because over time, I mean, I've been doing this again for a long time, is I've had so many clients come to me, submit the application, And I'm like, okay, here's your credit plan to get your credit scores up. Work on that. In the meantime, send us your documents so we can do your income and things like that. Well, a lot of people won't send in their documents because they're like, there's no point, right?
Yeah, I'm not ready. Mm-hmm.
And then all of a sudden we get their credit scores up and they're like, oh yeah, let's go buy. And then we get their income docs, and guess what?
It doesn't
They
matter.
don't qualify for anything.
Right.
So yay, their credit's up. That's great. But it stinks that we didn't have that opportunity to work on the bigger picture for them. Hey, here's what you need to do on your income. It doesn't look like you're going to qualify for much. Here's what we need to do on the income side of it. Maybe it's get a different job. Maybe there's an overtime situation where they're getting overtime, but they haven't gotten it for a full 2 years. Now we can put a date on, okay, as soon as you hit this date, we can start using the overtime, and that's going to boost you up. So it's all these little things that you got to be prepared for when you're buying a house, but you can't find that out unless you go through the full roll of it. Again, I don't think going through a full pre-approval process is that much work, but the benefit of that is huge.
Yeah.
Not only does it say you can buy today or you can buy tomorrow, whenever that is, either way, you know where you stand. And that's the key.
Yeah. So I have two more questions and then I'll let you go. So what is the most important reason, and give some more specific detail for why somebody should be qualified, pre-qualified, or pre-approved. Maybe we should explain the difference there too. But as a realtor, because there's that hesitation to do so, my biggest struggle is trying to explain to people why this is so important. And so maybe explain what the shopping list is and how that works, because it seems to be confusing to a lot of people.
I think that's very confusing for a lot of people out there looking to buy. And what it's based on is there's pre-qualified and then there's pre-approved. And that's the big difference. Pre-qualified can be as simple as you talk to a mortgage lender, you give him your income, you give him your debts, and then he gives you a number that says you are pre-qualified for this amount as long as your credit scores are this and your income is that. Obviously, that's not who knows what that number is at that point. I mean, that's just a total blind guess, in my opinion, if you're doing it that way. Another pre-qualified is you do the application, they pull your credit, and they run your loan through an automated underwriting system and get an approval. Again, you're approved, pre-qualified, we'll say, but again, they haven't collected any of your documents, so we don't know what exactly your income is. We don't exactly, what your assets are and things like that. So you might get approved, pre-qualified, get into contract, and then things will change dramatically as well. I've got a great example of that. I had a borrower that just sent to me about 6 months ago. This happened. She was in contract through another lender. They pre-approved her, supposedly. She went into contract, sent in her tax return. She was self-employed. And they said, oh, sorry, you don't qualify. So agent, I know, my agent, who I partner with and worked with for years, is like, you got to talk to Jeff and see what Jeff can do. Well, I got her tax returns over, got her application. I was like, all right, I'm going to put this together somehow. She made a negative $450 a month. That was her income. It was because the other lender didn't collect tax returns. They used her income on the application that she submitted it and ran it through the automated underwriting system and pre-qualified her. She was so sad. She was literally tearing up on that. I could hear the tears in the phone. You know how you can hear someone's voice?
Yeah, you get so excited about your house and then now you can't have it.
Oh, it was awful. So that's why you don't want to be pre-qualified. You want to be pre-approved. Now the difference is pre-approved is we get the application, we pull your credit, we run it through the automated underwriting system, but then we go the next step, and this is the key step. We got to collect your documentation. We need your W-2s. We need your pay stubs. We need your bank statements. We need your tax returns if you're self-employed, because we're using averages and all the income. Someone that made $100,000 last year on their W-2 made it because they might have had overtime income. Well, once we back out of the big picture of that W-2 that says they make $100,000, and we do an average, a 2-year average of their overtime, which is required for using overtime for income, they might only make $85,000 a year.
Yeah, it's a big difference.
Just taking their income that they put in the application, they weren't lying. They did make that much money. It was on their W-2, but the way we calculate it drops it dramatically. And I've seen that multiple times where people's income is a lot lower than what lenders are going to use to qualify. So the key is a pre-approval, a full pre-approval from me anyways. And I go a little bit beyond. I don't want surprises later on. If I issue a pre-approval, your loan's going to close and you're going to be happy and it's going to be a great process. But that's because I'm collecting all that documentation up front, analyzing it, and coming up with actual approvals that are going to stick all the way to close.
Okay, so last question. I know, yes, you did. I know this video is getting a little long, so we'll wrap it up. If you've never bought a house, you know nothing about home buying, and you want to get a home loan, what do you say you should, where are rates? What's the minimum credit scores? What information, what's the bare minimum we need to tell people so they know this is possible? I can do this. This is not as far out of my reach as I think.
Yeah, and I think that's a big key. The big misnomer out there right now, even for the last, as long as I've been doing mortgages, is that you need 20% down to buy a house. And that's just flat out not true. I mean, we do a ton of down payment assistance for the state of Washington, where the state actually, it's like a silent lien that they give you the money for the down payment so that you can buy a house with legitimately no money down. It's an amazing program through the state of Washington that we do a ton of loans with clients. We also see a lot of lower credit scores right now. I mean, the credit score minimums are a little higher right now just because COVID is in there, but we are still able to do some bond loans down to a 620 credit score. 640 right now is kind of the minimum score for a lot of the main programs. And then as you go higher than 640, the opportunities open up even further for some better and better programs, the higher and higher credit score, going from like FHA to conventional and things like that. But I think the bottom line is until you actually talk to a lender and ask some initial questions or get an application and get your credit pulled, you're just not going to know where you stand. I think the key is even if you don't know where, or if you have a conversation, you're like, I can't buy, I think that's not what you want to do. You want to go find out where you're at. Yeah. Even if it's terrible, 520 credit scores, at least we can put together a plan for them to get to the next level. And again, the key is with people with great credit, still you want to get out there and get your credit pulled to make sure it's not lower than you expect. With interest rates right now, I would say, interest rates are starting below 3% right now in a 30-year fix.
Oh, awesome.
So the amount you can get approved for now has gone up significantly because the rate is so low, drops your payment, meaning you can qualify for more house. So the amount of house you can qualify for is a lot higher because of these super low rates. And legitimately, there's just some amazing rates. I've locked a few people today at 2.75 on 30-year fixed loans that are unconventional, which are just amazing rates. And one of them was putting 3% down on a loan. 3% down isn't a ton of money, but to get that kind of rate with a great payment just seems like an amazing opportunity. I just feel like this is an opportunity of a lifetime for a lot of people. So if you thought about buying a house, or you're thinking that you're gonna buy a house in the next year or two, you might want to push that time frame up a little faster, only because the amount you qualify for is probably about a good 20 to 40% higher right now because of the low rates. Right. Normal rates over the last, if you look at a history of interest rates, the average, I think the last time I did an average was through 2016, and the average 30-year fixed was 6.75%. That was the average.
Yeah, so they're literally less than half.
Exactly. That's
amazing.
Crazy. So that's a 50% increase right there in qualifying mark just by that alone. So, a lot of people are like, oh, I'm just going to wait a year, or my lease is going to expire in a year. Again, buying out that lease might actually be a less expensive option than waiting a year and paying 4% instead of 2.75 on that mortgage. Yeah. So the word I want to get out there is now is the time to see where you stand and see if you can actually make a run at buying a house today, because the opportunity is so huge with these low interest rates. Now, I think rates will be low for a little bit longer. I don't see them going up tomorrow or even maybe even by the end of this year. But who knows when they're going to change? I mean, no one can predict the future. So we need to take this opportunity right now to really capitalize on getting a super low payment and getting into your own house. I mean, owning your own house, Katie, you know this. It's an amazing feeling.
It's so freeing. It's such an exciting, freeing feeling. You just know if, whatever I want to do, I can do. I have so much opportunity here.
And I know one other thing I'll leave you at is that it's building wealth too. Owning a house is building wealth. And I think I've seen one study, and don't quote me on this, but this is a rough number, is like someone that's rented up until this point in their life has a net worth of around, on average, I think around $5,500. The net worth of an average homeowner is like $200 and some thousand.
Mm-hmm.
A massive difference there between the two. And again, don't hold me to those numbers, but I've heard this quote several times before, and it's a pretty huge stark difference between those two. So just by buying a house, it's not about buying a place to live. It's about building wealth for your future and your family and everything else. It's an amazing tool to help you get to that next level of growing your net worth. And so I think that's something that we can't forget as well.
Yeah. All right. Well, thanks, Jeff. I feel like this is going to help prompt a bunch more questions from everybody. So if you guys have questions about, how to buy a house or your appraisal process or anything like that, our information's down there at the bottom. You're welcome to call, text, email, either one of us. Or leave some comments down below and let us know what questions we didn't answer or dive deeper into something. There's so many intricate details to the home buying process. Or even if you've been thinking about refinancing, call Jeff right here because he is amazing. And like you said, those rates are super low. He's gotten tons of my clients refined in just the last couple of months. And their payments have dropped $200 to $300 a month, which is a huge savings for a lot of people. So let us know what you guys want to know, and we'll do our best to answer all your questions. Thanks, guys.
Thanks, Katie.
Thanks, Jeff.
Have a good day, guys.